Hey everybody, Rob Maurer here, and today we are of course talking about Tesla's Q1 delivery and production report, which just came out after market close today. And as we can tell by the after hours movement in the stock, up about 14% as I'm recording this, the market is reacting very positively to this report. So let's look at the numbers. In Q1, Tesla produced 102,672 vehicles and delivered 88,400. So starting with deliveries here, that 88,400, that was well above the 80,000 that we had discussed as a whisper number on Tuesday's episode. And while at that time, the total FactSet consensus was at 91,500 roughly, as we had talked about, not all analysts had updated their estimates with the information about the Fremont shutdown. So for those that had, which I later tweeted out, the estimated consensus among those analysts was 79.9 thousand. So that helps explain some of the strong reaction in after hours trading. We'll talk more about production in a second, but sticking with deliveries, that 88,000 number is up 40% year over year from the 63,000 last year in Q1, and down 21% quarter over quarter, which of course was expected because Tesla had been draining inventory for so long. This quarter, deliveries were never going to exceed production like they had the last 3 quarters. Plus you have tax changes happening this quarter, you have the seasonal weakness already in Q1, and then all of the macro environment stuff going on as well. So this 88,000 number, very strong. Fortunately, that did line up with my forecast, which I pretty much approached from a production standpoint, which means that this quarter, it's unlikely that Tesla had much issue selling the cars due to the macro environment situation, which is really impressive to see. In terms of the delivery breakdown, S and X were actually combined up 1% year over year from the roughly 12,100 last year to 12,200 this year. And then Model 3 and Model Y, which Tesla combined on the same line here. So we didn't actually get a breakout for Model Y, but those two combined were up 50% to 76,200 from last year's roughly 50,900. So those year-over-year comparisons are probably the most important, but I also like to, for Tesla, look back on the 2-year comparison because I think it gives us a great reminder of just how much progress Tesla's making and how quickly it is. And I think sometimes we lose sight of how much is happening in such a short period of time. So looking back 2 years ago in Q1 2018, Tesla delivered roughly 30,000 vehicles. So this is actually up 195% from 2018, or almost triple that 2018 number. And of course, a lot of that is for Model 3, but there were still Model 3s being delivered in Q1 2 years ago, almost 10,000 of them. So really happy with this delivery number. And then shifting over to production, production came in just shy of 103,000. That was up 33% year over year from the roughly 77,000 produced in total last year in Q1. But I think even more impressively, only down 2% quarter over quarter from just shy of 105,000 in Q4. For some extra context here, last year's Q1 to Q4 comparison, so Q1 2019 compared to Q4 2018 in terms of production, Q1 was down 11% quarter over quarter, and that was without this type of macro environment, which necessitated shutdowns in not just one factory, but 2 factories for Tesla. Both Shanghai and Fremont faced shutdowns this quarter. So yes, obviously having Shanghai online this quarter versus really not producing much in Q4 helps that comparison, but that's kind of the point, isn't it? I mean, Tesla has 2 production facilities now, and we're going to start to see production grow rapidly because Tesla has 2 production facilities. Speaking to vehicle production there, obviously Tesla has more than 2 factories in total. There were 91 days this quarter. Tesla lost at least 8 from Fremont, at least 7 from Gigafactory Shanghai, likely a little bit more, so let's call it 9 days in total of production lost. That's 9.9% of the quarter, so without that downtime and at the same production rate that Tesla had throughout the quarter, which is probably a lowball estimate, Tesla's production should have come in without these shutdowns at just under 114,000 vehicles. That would of course set a new all-time high for Tesla, and that would have been up 9% quarter over quarter without these shutdowns. So for Tesla to set its second highest all-time high quarter in production this quarter with these shutdowns, very happy with that. Moving on to the rest of the announcement then, it was pretty sparse on details, much sparser than I expected it to be as we talked about. Tesla just says, quote, Model Y production started in January and deliveries began in March, significantly ahead of schedule. Additionally, our Shanghai factory continued to achieve record levels of production despite significant setbacks, end quote. So the 3 things I was watching for was whether or not Tesla would update or reaffirm guidance. They have done neither here, simply leaving that piece out. So I would rate that as a neutral. I think many people probably expected them to lower guidance here. Personally, I sort of expected them to go out on a limb and reaffirm guidance. We'll just have to wait until the earnings call to see if they give us any more updates on that. Under normal circumstances, I would expect this earnings report to be on Wednesday, April 22nd after market close. But because of everything that's going on, it wouldn't surprise me if Tesla does wait an extra week or two on earnings to try to get as much information as they can before issuing any sort of commentary or updated guidance. The second update that I was looking for was on Gigafactory Shanghai, and as I just read, there wasn't much of an update there, just that they had continued to achieve record levels of production. I would assume that would mean as they moved through the quarter, on a weekly level, they continued to achieve record levels of production, because comparing to Q4, where they produced just under 1,000 vehicles, wouldn't really mean too much. Tesla also says they did that despite significant setbacks, which it's unclear what that means. I have to assume they're referring to the macro environment setbacks, but that language is a little bit vague. In the whole delivery and production report, I think the lack of information on this point was the most surprising to me. I really expected Tesla to come out and emphasize the progress that they've made at Gigafactory Shanghai and emphasize the importance of their more globalized production now, especially in the face of the uncertainty around the ongoing production shutdown at Fremont. So I'm very surprised that we didn't get more of an update here, but I'm also not necessarily concerned by it because all those production numbers that we just went through were in line with my expectations, which means it's highly likely that Gigafactory Shanghai production is also in line with my expectations for this quarter, which was about 10 to 15,000 units. What I would say is that I think if Tesla had achieved a production week of 3,000 units out of Shanghai this last week of the quarter, they probably would have mentioned that here, unless for some reason right now they want to continue their practice of underpromising and over-delivering. I say continue, maybe that's a little bit of a misnomer, but I feel like Tesla has definitely shifted a little bit in terms of their communication with investors to adopt more of that mentality when possible. But that has been a pretty recent shift, so we'll just have to see as time goes by if that does continue. And then the other trend that I've noticed that might also be at play here is I think Tesla in general is just giving a little bit less communication. We talked a lot about that idea around the Q4 earnings report, and that idea or that trend did come into play for the Q4 earnings report when Tesla only gave us really high level guidance annually with their quote unquote comfortably exceeding 500,000 deliveries for the year guidance, rather than providing a range like they had for 2019 or giving us any sort of quarterly guidance. I think that same idea is a factor for the third thing that I was looking for, and that was an update on Model Y. Tesla was super vague here. I expected them to at least share deliveries or a production rate. We didn't learn either of those things. So for now, I'll just work with my assumptions that, roughly 1,500 or so were delivered until we get more of an update here. I would expect this to at least be a question on the earnings call if Tesla does not address it themselves before that. Overall for this report, really happy with the numbers that Tesla's reported. Deliveries really strong, production really strong, but those are now historical. We have passed those numbers now, and looking forward, there's a lot of uncertainty, and Tesla didn't really address any of that uncertainty in this report. So while the stock is up right now, I think as people start to process that and start to look forward again, I'm not optimistic that that is going to allow Tesla to, deviate from the macro environment is probably the best way to look at it. Meaning that once these numbers are processed and we get our, gap up or whatever the case may be, I don't think that that necessarily continues like we often see with a strong earnings report, for example, where you get that gap up and then you see a strong uptrend for the next few days or few weeks as the future outlook tends to slowly adjust and improve based on the earnings report. This really doesn't change much about the future outlook. We're still in the midst of a very uncertain time, and I think because of that, we get this gap up and then Tesla continues to float around with whatever the macro does, which is anybody's best guess at this point. So obviously that's super speculative, and it's not like there's no fundamental impact of these numbers. This does de-risk, and as we talked about with Gally yesterday, this type of delivery number does show strength in demand, and that is one of the two most important factors for investors, demand and profitability. I'll always say that. So not trying to be too negative. Again, overall, definitely a positive report, but as always, I do think it's worth considering some of those potentially missing pieces. The last thing that I wanted to point out on this today, which is just kind of a for fun sort of thing, I guess maybe fun isn't the right word, but at the very least, something that is interesting, and this was Reuters' reaction to the delivery report. So if you were to go now and search for Reuters recap on Tesla's report, you would see a headline that reads, quote, Tesla sees strong Model Y production, deliveries, shares rise, end quote. But what you're not going to see is Reuters' original headline, which if you're watching here on YouTube, you can tell from the hyperlink that leads to this article with this headline now, that actually originally said, quote, Tesla misses estimates for quarterly deliveries, end quote. The problem with that headline is that doesn't fly so well when the stock is up 15-20% after hours. They also changed the body of the article, which originally referred to Tesla missing another consensus estimate. It wasn't FactSet in this case. But now even the body has changed and there's just no mention of any sort of miss at all. So I just wanted to point that out. Stuff like that does happen. That's why I like to talk about the consensus estimates, because they do shape those headlines that are published pretty much immediately after reports come out, regardless of whether the news is positive or negative. They're going to use their pre-written articles and generally slant to probably the most negative headline possible. That is important because sometimes algorithmic traders will trade on those headlines, and in some cases that can push the stock down unjustifiably in the first moments after big news is released. So something to think about. Just wanted to point it out, as I did have evidence this time of that happening, and it definitely won't be the last time. It can also create some opportunities. That is it for today though. As always, thank you for listening. Don't forget to subscribe. Don't forget to sign up for notifications. If you're enjoying what I'm doing here and you want to support, you can find the details for doing that at patreon.com/Tesla Daily Podcast. And of course, make sure you're following me on Twitter at Tesla Podcast. I'll see you tomorrow for the Friday, April 3rd episode of Tesla Daily. Thank you.